Greetings, traders out there in Traderland. This is the weekend edition. Good through Sunday, April 6, 2012. Let's hit the ground running here on Friday. The markets drop huge, down almost 170 points on the Dow, down 1.27%. The S&P down 0.6%. I'm sorry, 1.6%. Nasdaq down 2.25%. Russell down 1.85%. So you have both the Nasdaq and the small caps leading the charge to the downside. Banks down 1.5%. VIX up almost 10%, up over 9%. Still underneath 20 mark. Gold up 0.3%. Silver up 0.4%. Crude oil down a whopping, and this is a huge amount. Crude oil dropped by 4%. And US dollar pops by 0.4%. Trend closing right at 2.0. Gang, remember that. Furthermore, on the daily S&P, we're at a major support area. Big time support. Technically, it looks like we've just cracked down below it. In Thursday's video, go back and watch it at 2 minutes and 10 seconds in. You'll hear me talk about the potential of a drop. If we start to drop, we could get down this line and fast, get down there in a hurry. Sure enough, that's exactly what happened. We just come crashing down to a major support area. Right here, support. We come over support. We come over, found a little support, and support here again. We do have a higher swing and higher swing lows. However, the reason I'm not too excited on the bull side of things is because of the expanded range of this big candlestick to the downside. And the fact it looked like we closed below it. That's no good. Technically speaking, if I were to bring another line in from this swing low, let's go from this one to this one right here, we cracked it today. So anyway, you slice this one, we are in some significant trouble. Now on the MACD, on this MACD we have a drop that's taking place now. MACD line is now below the zero line. That is bearish. We don't like to see that if you're a bull, but that is something very nice to see if you are a bear. On Friday, we had a report come out. Unemployment rate did tick down to 8.1%. So why the huge sell-off? It's because of this. We only added 115,000 jobs. The estimates were 170,000. So we missed those estimates. It's a lot of these economic news indicators that we are seeing, these reports that are coming out, we're missing estimates and not to the good side. Oil right now is lowest point since February. Oil is off that 4%. That's a pretty significant drop. And let's go to a weekly chart here. Now on the S&P on the weekly chart, we are down for the week 2.4%. 2.4%. Nasdaq's down, get this, 3.7%. This is the worst week for Nasdaq and S&P for all of 2012. Dow did slip 1.4%. But the big thing we were talking about is if we start to drop here, we have a double top. We come up, smack our head, we drop, we pop up again, smack our head, and we drop. However, this isn't confirmed until we drop below that swing low as far as the textbooks are concerned. So we're at that support area right now. You can see that coming across. However, I think that we need to really get below this 1363. If we can get below that and the 1356 area, if we can get below those areas, it could start selling off in pretty dramatically. We do have a rising 20-day moving average that could act as support, so that'd be something else we'll be watching for. On the monthly chart on the S&P, here's what we're dealing with. Now, we're only starting out here in the month, but we're starting out with a lower high. Last month we had a red candlestick. We had what's called a hanging man reversal pattern for the month. That's no good. Furthermore, we get a tweezer top for all those that participated in the 101 webinar that we did, the class, online free class that we did this past week. You know, tweezers can be very powerful. And sure enough, that's what we're seeing. If we go lower than this low, and that puts it, if we go lower than 1357, remember that number, 1357, we're in a lot of trouble. I think it'll just crash to 1350. If that happens, we'll just crash on down. We do have some trend lines coming down that could act as some support. Let's go over here to the Nasdaq. Now the Nasdaq looks a lot like the S&P. Tweezer top, hanging man, lower high, and we're almost starting to make a lower low already, and we've already closed below a trend line. You can see the support, resistance. We're now down below that on the monthly. Ouch. Not a good sign. Now we're taking a look here at the weekly chart. We had a great week last week, big engulfing, boom, taking off, but we do a stall and we come crashing right back down for the week. No good. Again, for the week, the Nasdaq's down 3.7%. That is a huge drop. Everything that we gained last week, we gave back. So the bears are now in control. We're still above the zero line on the MACD weekly chart. But if we start breaking down below that, woe to the markets. On the daily chart, we had this, what's called an abandoned baby, but there's two of them, so it's actually a really small island. So you get this island bottom, gap down, island, gap up. That's usually historically very bullish after that. But what's interesting is we got a gap down with an open window, and we are already below that area. This area that we're looking at 29.59 on the daily as major support, we're down below at 29.56. Ouch. MACD decisively below the zero line. Going over here to the bank, this has 140 to 170 banks in this Nasdaq banking indice, and so it is giving us the best blueprint or chart that we could look for when it comes to what's happening in the banking sector. But check this out on the daily chart on the banks. Symmetrical triangle, boom, breakout to the downside below all major moving average and below the zero line. Ouch. Looking at the weekly chart, everything that we got last week, we gave back. We have a lot of moving averages down here, weekly moving averages that could act as support. But if we start to drop, this could be a big time problem. I'm going to drop another line here. Go from this to this. I mean, we're at a nice support area. We go back in time, see if it makes any sense anywhere else. Yeah, that looks nice. So you have resistance, support. If I go to a line chart here, you can see this really nicely. Resistance, support. We're at that support now. So let's go back to the candlestick. So that's what we're dealing with. If we break below that support line, which it looks like we're teetering with right now, that's going to be a major problem. On the monthly chart, had this nice pop. Now we're down below the 50-month moving average, lower high, but this is inside. The last couple candlesticks been inside, so we're building this bullish pennant. So this can potentially go bullish, but if it starts breaking down, especially if we go below the 20-month moving average, woe to the markets. Here's the VIX Volatility Index. We have a bottom, spike, bottom, and we're heading back up right now. If you just look at the patterns, every time we get here, we rally. 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 If the VIX rallies, okay, if the VIX goes higher, that means the markets are dropping like a rock. So it is poised to go higher here, there's no doubt. On the weekly chart, we are very low. If we start going into these moving averages or higher, woe to the markets. And on the daily, we have cleared those moving averages, and we are positive on the histogram, zero line. This is GLD, gold, support. We're at that support right now. The gold needs to break out if it's going to stay bullish. If it's not, if it breaks down, gold could be in a lot of trouble. We're below the zero line on gold on the daily. The weekly chart, we're building a low base, which is more bearish than is bullish. We need to stay above 158. And right here, we have closed. If you look at this, no, there's no close. I want to be very careful. We are teetering with death here on GLD on the monthly chart. The month is just getting started, so we're lower. There's a really good chance we'll rally back. I mean, look at this. That shadow rallied back hard. These shadows, see this shadow? Rallied back. These shadows rallied back. This shadow rallied back. These shadows right here, if they could easily rally back. So this could be a golden area in time to buy gold, or this is the start of the demise of GLD for the time being. Oh, Apple had a great bullish engulfing at a support line, set up to go. It gapped up, gapped down. Did not like to see that. Was not playing this, but that would have been a great opportunity to be looking for a trade. But the markets were not conducive. Two big bearish days. On the daily chart, this is a lot of trouble. On the weekly chart on Apple, we're just in a nice bull pullback. We're not done with it yet. So this could give us a buying opportunity fairly soon. Maybe if it gets down to 550 or even $500, and then be looking for an opportunity. On the monthly chart, we're just beginning a pullback. So I could very easily see a $500 target on Apple. However, the valuation is much higher. The PEG ratio is lower, and estimates are higher. So if the markets go bearish, expect some drop. All right, let's take a look here. Look over here at 1 week performance. Everything is in the red. Basic materials took a huge hit, down 4%. Financials down 3%. Technology down 2.8% for the week. Big bloody week. And on Friday, bad. For the month here, you'll see financials really low, 3.2 for the month. Utilities, only one for the month that's in bullish territory. The problem with this right now, gang, is utilities is a defensive sector. So when the markets go bearish, people start putting their money into the sector. We teach sector rotation in our mentorship, so it's something our students know quite a bit about. And I'm only briefly talking about it here because of time constraints and because you're not a student with us yet. But 3-month performance here, basic material. See this? In 2007, 2008, we saw commodities take a major hit right before a major correction in the markets, and we are certainly seeing that. Down 9%. Ouch. Financials also in the red for the 3 months. Not too good. I don't know how you guys found our website, but this is our website for all those that haven't been here yet. But I want to show you something. Well, first, if you're on Facebook, just like it and you'll be part. But anyway, Matt right here is one of our new analysts coming in. Let's go to trading videos. I'm going to show you a couple new pictures of people that you haven't seen yet. And you know me here, Miguel, he's a Spanish analyst, but we also have Nitza coming in, and she is a Spanish analyst also. So we have both of them from Mexico City. And matter of fact, I'm starting to learn Spanish too. I've got my Rosetta Stone, and I'm really excited about that journey. But if you want some just awesome day trading, go watch Mark's stuff. But Matt Ratliff is going to be right here, and he'll be doing our futures trading and maybe even some options stuff. He's awesome. He used to be the model for Abercrombie and Fitch. So if you Google Matt Ratliff, you'll see what I'm talking about. and Carolina, our associate, she does ETF on the Qs. So anyway, let's go back to the homepage. Gang, let me give you a huge tip. Save your money on seminars and books and scouring the internet. If you're going to make money and be a huge success in the markets, you need to go through our very good, excellent training that we provide. Do it through mentoring. And here's some dates, mentoring, and you can look at those on your own. But we're doing some live ones coming up in June. So the week of June 24th, we are going to be in Vegas doing a mentorship. And then for those mentor students that's already been through mentoring, we have an advanced mentorship at the tail end of that week. Awesome opportunity. Send us an email at mentor@groktrade.com. or click down here on mentorships. If you do that, you can watch videos of our students. So this page, just come down here and watch the videos of all of our different students. Fill out this form and we'll just get back with you with some information. Take care and very safe trading, and please share us with a friend.